Did you know that with the EIDL loan, you can get up to $150,000 from the government in a very low interest, long payment loan to help your business? I'm going to tell you how to do it. So Congress passed the CARES Act a couple months ago, and in there they gave us two options for small businesses, PPP and the EIDL. The PPP, everyone knows what that is at this point. It's a forgivable loan that the government gave to small businesses to keep their payroll going. The EIDL is actually a misunderstood, very mysterious cousin to the PPP. I'm going to tell you all about it. I'm going to explain what it is that the EIDL is and how it can help you keep your business going and give you a very needed injection of cash. The EIDL stands for Economic Injury Disaster Loan. This type of loan actually is available after most disasters, such as a hurricane, earthquake, or any kind of other natural disaster or terrorist attack. This type of loan is not specific only to the CARES Act and not specific to COVID-19. The difference in this particular case is that the government included something called the EIDL grant or advance. And that's a lot of people see that. You see that on YouTube a lot where it says $10,000, get your free $10,000 or $15,000 in some cases. What that is basically is the EIDL grant is an advance in essence on an EIDL loan. Now, the way that the EIDL grant works is that basically if you received money on that, at this point, if you do nothing else, that money is a grant and you don't have to pay it back. If, however, you want more money, then you're going to have to apply for what's called the EIDL loan, or in essence, the big loan. Now, I'm going to tell you a little bit about that, how to apply, and how it can help you keep your business going. The EIDL is basically a loan for working capital. Now, what that means is the SBA is going to give you an amount of money that you can use for working capital only. You cannot use this money to pay off other debt. That's the difference. Now, it is a non-forgivable loan. I'm going to show you what it looks like when you receive the initial offer. This client of mine received a $150,000 offer. Now, this is a completely different thing than the PPP. The EIDL is a 30-year note. Basically, you have 30 years to pay this back. $150,000 at 3.75% is about $700 or $750 a month. Now, this is a personally guaranteed note. You're going to have to guarantee it yourself as a business owner if you take out this money. Now, why would you take out this money and not only the PPP? Well, obviously, you need more money. The PPP might not be enough. The PPP also has strings attached, while the EIDL does have some strings attached, but it's not the same thing as the PPP. The difference between PPP and EIDL is PPP needs to be spent within 8 weeks of obtaining the disbursement. I've talked about this in previous videos like the one I'm showing you above. Now, the EIDL, however, does have some strings, but it's not the same thing. You don't need to spend it immediately. You can use it for whatever you want other than paying back loans. What that means is you can't, let's say you owe a bank $50,000, you can't take an EIDL loan and use $50,000 from that to pay off another bank. The money is to be used for the business as a replacement of profits and revenue that you're not obtaining while the COVID-19 is affecting your business. That's very important. Other than that, you can use the money for pretty much anything you want if it's business related. Again, if you take the money and buy a house with it, I'm assuming that the government might call the loan, and who knows what that means, and they might sue you later on. So you got to be really careful. You don't want to be doing that. The other big difference between PPP and EIDL is that the PPP is non-credit based, and it's basically based on your payroll and what you spend. The EIDL is based on your revenues. Before the second week of May, which is where we're in right now, there was a $2 million limit. Now it's $150,000. $150,000 is still a lot of money for a small business, so it might still be worth you applying. Now, when business owners hear the word credit, and especially personal credit, they get freaked out. A lot of people don't have the best credit, and it might be difficult in your mind to apply for this loan. However, you might want to consider it anyway. The SBA has been put under orders from Congress and from the president to loosen up their usual standards. Now, there are certain things that will kill your application, from what I understand. These regulations aren't public, but from what I gather from my readings, it does seem that there are some limitations. Number one, you can't owe back child support. I'm not sure how that works exactly, but if you're in some sort of arrears, I don't know if it's if you have to be under court order or what, but there is a child support element. Number two, you can't have, which is the big one, you can't have defaulted on a previous SBA or other federal loan. So if you have that in your record, they're not going to give you this money. It doesn't seem like. Number three, you have to have some sort of decent credit. It doesn't have to be excellent. There could be minor dings on your credit, and you're going to have to explain those things. But it's not a cutoff of a certain FICO score or something like that. You can basically have a lower FICO score, still apply as long as you have a reason why your credit wasn't that great. And then the last one are federal taxes. If you owe taxes in general, you're going to have to be in a payment plan in order to qualify for this, the EIDL loan. If you're not in a payment plan, you should immediately today call the IRS, get yourself into a payment plan so that you are able to then apply. If you have all these things, it seems like there's no collateral element, so that's a difference between a normal SBA loan and this type of loan, EIDL loan. Usually there's some sort of collateral or a very high credit or even a cosigner requirement. Those requirements are not in this situation. So therefore, you might have a little bit less credit worthiness, but you can still apply, and you might get up to $150,000 for your business. The other big difference between PPP and EIDL is that the EIDL is a real loan. It's a personal guaranteed loan with a 30-year note. You're going to have to pay this money back. I don't know if there's a prepayment penalty because I haven't seen the actual loan yet, but usually there aren't any for SBA. So let's say that you take the 150 grand and you have a fantastic couple of years, then you can pay that back quickly and not owe a lot of interest and get that off your books. The other big difference is what I mentioned earlier is that you don't need to spend this money immediately. This money can be held in reserves and it can be dealt out slowly as you need it for the next year, because the next few months are the critical months for most businesses. So if you are in a position that you have not applied for the EIDL, there's a couple considerations still. You might have already applied and you don't even realize it. A lot of people right after the CARES Act ran online and applied for what they were thinking was a $10,000 free grant. That has come in some ways for people. Some companies have gotten a couple $1,000, $1,000 per employee, that sort of thing. Well, that is the EIDL grant. Now, if you applied for that, then you have a number. That number is your place in line for the EIDL loan application. You're going to see now that only agricultural businesses can apply for new EIDL loans. That doesn't mean that you can't apply if you have your number from a couple months ago. My client who got the $5,000 from the EIDL just received his email saying that his EIDL loan is being processed, which means that even though it's beyond the cutoff, he's still considered in line because he got his number a couple months ago. So hopefully you went online right after the CARES Act was signed, or the weeks after that, which I'm sure you did if you're watching this video and watching videos like this, and you already have your number. If you have your number, you're going to get an email from the SBA. The SBA is going to tell you, going to ask you how much money you want, up to $150,000, and then you ask for that. Now, there's still an application process beyond that. My client just received his email a couple of days ago. He's now going to be able to apply for the whole thing. I'll do an update of this video when I receive more information about that and see how that goes for him. Well, that's it for now. If you have any questions, I will answer every question in the comments. Please subscribe. It's very important that I get a lot of subscribers for my videos. I'm going to be creating a lot of videos about this. So my name is Diego Mendez. I'm a bankruptcy lawyer here in Miami, Florida. Thank you.